Happy Monday, everyone. The stock market has strong turnaround with all three major indices. S&P 500, Dow Jones, and Nasdaq all gained around 5% last week. Investor sentiment will be on trial this week. Roughly one-third of the S&P 500 will be reporting its September quarter earnings results. We'll be hearing from companies across a wide range of industries and sectors. We will not hear too much from Fed officials as they are in their blackout period for November FOMC meeting. However, we will still have a busy upcoming week, starting with the October Consumer Confidence Index on Tuesday, the September new home sales report on Wednesday, the advanced Q3 GDP report on Thursday, and the September personal income and spending report on Friday, which will feature the Fed's preferred inflation gauge in the form of the PCE price index. Next, our investment strategist, Rob McDougall, will walk you into details of the economic updates.
Good morning, everyone. This is Rob McDougall from Zhang Financial with your weekly economic update. Today is Monday, October 24th, 2022. We're going to go through the economic data from last week and take a look, preview some of this week's economic data. So last week, there were only 3 economic data points of significance. All 3 were housing related, and none of the 3 were really impactful in terms of the stock or bond market. On Wednesday, September housing starts came in slightly below consensus, 1.439 million. Consensus was just slightly higher than that. These numbers make sense given the rising interest rates, rising mortgage rates that we've seen on a year-to-date basis. On Thursday, we had existing home sales actually came in line with expectations, 4.7 million, right on expectations, actually 10,000 above. So nothing to speak of. The other data point last week were building permits, and they came in actually slightly above expectation. Expectation was 1.55 million. It came in at 1.564. So again, those 3 data points really didn't move the market. But what did were expectations that the Federal Reserve might actually back off their already announced planned Fed fund increases going forward. So there were a number of Fed participants that were either on the FOMC committee or related to it last week who started discussing the possibility that the Fed maybe wouldn't tighten as much as we expected. So as a result, the Fed fund futures now reflect the fact that instead of the strong likelihood 95% plus last week, that we would see 1.5% increase towards the end of the year between the November and December meetings. The expectation now is split almost 50-50, 48% chance of only 1.25%, which would likely be a 75 basis point increase in November, another 50 in December, and the other 50% probability is that we'll get 2 75 basis point increases. Now, I think what will really dictate that likely will be the GDP number that's going to be coming out this Thursday. We'll talk about that in a moment. S&P 500 earnings last week, this was encouraging. So quarter to date, 20% of the S&P 500 companies have released earnings, and 72% of them have come in above expectations. So that's really solid. And the expectations, I talk about this quite often, expectations came down just a shade more for third quarter for the total S&P 500. Last week, it was an increase of 2.9% earnings year over year. Now it's 2.8%. I like that. Expectations coming down and S&P companies beating earnings expectation. That is usually a good combination. So last week, based largely on expectations that the Fed may not tighten as much as expected, we actually saw strong returns in the equity markets. So last week, S&P 500 was up 4.8%, very strong showing. What led the way last week had actually large cap growth. Large cap was up about 5%. Growth stocks were up 4.6%. Value still did great, up 4%. Small cap trailed a bit at plus 3.3%. So on a year-to-date basis, we keep track of this, value versus growth. Growth still on a year-to-date basis down nearly 36%. Value down about 7.3%. Again, great for our portfolios. International severely lagged the U.S. again last week. The ex-U.S. world market up 0.93%. Again, remember the S&P 500 up 4.8%. China, another very tough week, minus 2.7%. Fixed income last week also down. So the 2-year yield was up just 1 basis point, but the 10-year yield was up 21 basis points. That's now up 2.7% on a year-to-date basis. So the one thing that really sticks out, of course, is the U.S. long-term government return. I always stress to our clients the fact that we have none of this in our portfolios, but U.S. long government bonds down 4.93% just last week. That's just amazing. Year-to-date, down 34.51%, and this is the most stunning stat of all, I believe. The NASDAQ, as bad as it's been hit, is down 30.6%, and again, U.S. long government bonds on a year-to-date basis, minus 34.5%. So this coming week, we have a much more packed economic calendar in front of us. We'll be starting on Tuesday with consumer confidence, see new home sales the next day. GDP is the big one on Thursday. We'll talk about that in a second. And then on Friday, we have a slew of both income, spending, and inflation numbers coming out. So tomorrow, U.S. consumer confidence. That is the federal government's measure. We often use the University of Michigan metric. They usually move in lockstep. However, expectations are for the U.S. Consumer Confidence Index to actually be down for the month of October. It was 108 last month. Expectations are it should come in at 105.5. You may recall from a week or two ago that the Consumer Sentiment Index from the University of Michigan actually ticked up in the month of October, which was the 4th consecutive increase. Thursday, again, is the big one, GDP. This will really dictate where the markets are going to go because it will dictate expectations of what the Federal Reserve will do in terms of tightening in the near term. So the consensus is GDP growth of 2.3% for the third quarter. Second quarter, you may recall, was negative. It was negative 0.6, and the first quarter was a negative 1.6. So discussion about recession will likely be put to rest for now on the Thursday GDP release. One thing I'll say is while the consensus is at 2.3%, the Atlanta Federal Reserve still is very high. In fact, they increased their estimate for third quarter again a little bit last week. They expect growth of 2.9%. Now, this gets really tricky in terms of how the market might react to that GDP number. My best guess is that there's a sweet spot which the market would feel, okay, no recession, strong enough GDP growth, but not too strong to push up inflation. And I kind of think that data point probably is right around the Fed's number. I would guess if we see a GDP growth of 3% plus for the third quarter, that might actually lead investors to be more concerned about inflation and think the Fed might tighten further. I would guess, best guess would be if we're closer to the 2% range, investors would really welcome that because, again, it would put aside the recession discussion at least for another quarter and likely take some pressure off the Federal Reserve to aggressively continue pushing interest rates higher. On Friday, again, there are several economic releases, personal income, personal spending. Both of those are expected to be flat with the prior month. Personal income up 0.3% month over month. Personal spending up 0.4% month over month. Big one on Friday, PCE prices. This is the government's preferred measure of inflation. You may remember that CPI is running 8.2%. It was disappointing last month. It was supposed to come in at 8.1, but was 8.2. The PCE last month was at 6.2. The consensus expectation is it'll drop to 6.1%. Again, very key indicator. If this comes in below the 6.1, 6.0, 5.9, I think you would see a very strong rally in the equity markets, U.S. equity markets. So, big week economically speaking, so stay tuned. Watch us next week as we digest and review and analyze all the economic data that's coming out this week. Last thing, our Zhang Financial client events coming to a close. We had 2 very successful, filled out, full client events in Detroit last week, Wednesday. This Wednesday night in Ada, we will have a dinner. And then for those of you who could not make any of those, we'll have the Zoom presentation done on the 27th, which just happens to be the day that GDP is being announced. So I might have to scramble to put that together. But that's it for this week. Thank you so much for watching. Hope to see you next week. Thank you.